Hello, welcome to week 5, and we're going to look at the content in D2L as well as talk about this anonymous caller case, a newly hired controller who apparently hasn't been out of college long because they're calling their former college professor and asking advice on what to do about perceived fraud that is going on in the company. So having said that, let me share the D2L content here for module 5, which is week 5. Again, we've gone through a lot of fraud in this class, but that gives us a lot of teachable examples of exactly what should be performed in the finance and accounting function of a corporation or a small company. I've got another link here for components of internal controls. This is similar to what we saw with Michigan Tech in the last week's content, a little bit different layout here. So I would encourage you to read over this. Again, ETSU has the same thing, similar to what Michigan Tech and Kansas State has. We continue on here. I've got a link to ACCT Fraud Insights. Provide you some information on what you would do if you suspect fraud, like making copies of records and keeping journals for your own personal account, if in case you get let go and then find yourself liable after the fact for something that's gone on, which is another part of this case we're going to read about. Consider hiring yourself an attorney if you find yourself in situations like this, unless you decide to leave the company, which in case you may want to still hire an attorney. We'll click on this, the case of the anonymous caller here. After I go through the rest of this, there's a whistleblower IQ document here I would encourage you to read. Whistleblowing is something that's come about in the last 20 years or so, that if you suspect something fraudulent going on, they usually call it a fraud line, use an 800 number. We had that at Exide, where any employee, anyone could call this number and talk to someone external through the organization and discuss issues that they see going on in the company. I think they in turn probably have the external firm probably has a pretty high pecking order with either to the CEO or VP of HR on potential issues. Tone at the top versus tune in the middle, a good little article there as well. You should read from your own understanding of this topic of fraud. And when the tone at the top is corrupt, it usually filters down, but not always. And then finally here, a link here on bookkeeper theft. This lady, and if I can get rid of the information that's on here. Let me click it again. There we go. Lady in Valdosta, Georgia. Well, hopefully you will be able to pull that up. I'm not sure why I'm having trouble with it now. The lady in Valdosta, Georgia was a bookkeeper. And she actually stole $341,000 through various means, mainly through ACHs that she had control over, and was recording the entries, and ended up going to prison for 41 months. So hopefully you can read that. If you can't, no big deal. I think that's everything that's on this page. Oh, the last one, forgot about that. CASO, Internal Control Framework, Committee on Sponsoring Organizations, the Treadway Commission. Good little link here to, if you want to click on this and learn a bit more about internal control guidance. This framework, which is the 2013 version, really became important after Sarbanes-Oxley in the early 2000s, 2002, 2003. But again, this sort of just give you a flavor for what's going on with internal control and the lack thereof, in this case, the anonymous caller. So having gone through this, let's go ahead and download this document. Let me make sure I'm sharing this. All right. One more time. There we go. All right, so here's the anonymous caller. Get a little case here. Recognizing it's a fraud and evaluating what do you do? It's a fairly small company. You know, we've been looking at large companies. The last couple of these have been smaller. And you can read through this. It's a very engaging case here. Hasn't been there long, but they're now just a few months in. They're wanting her to sign this commitment letter to the bank because they're getting funding from the bank, and they're struggling with their financials, and they're not making money, for lack of a better term. It's a cash flow issue. I've got highlighted in yellow a lot of the stuff here. The CEO and CFO, Chief Executive Officer and Chief Financial Officer have been arm twisting the accounting staff to book sales transactions before sales occur. That's where the ASC 606, revenue recognition, which you've probably already studied a little bit about back on week number 1 with WorldCom. They're booking sales transactions. The sales hasn't occurred. Remember those performance obligations, the 5 steps. It says that no goods have been shipped. So if you haven't shipped anything, it's like shipping those batteries that I've talked about. If it hasn't been shipped, then you can't book the revenue. And as it turns out, the CEO even instructed the accounts payable clerk, which is unusual. You have a CEO going to an accounts payable clerk while they were out of the office to record entries the CEO had handwritten on a piece of paper. Obviously a red flag. It says the student clerk is currently taking your auditing course where financial statement fraud is a topic. She's only been there for 3.5 months. One of my first tasks was closing out the prior fiscal year, assisting the external auditors who are probably not involved in this fiasco, more than likely, or this financial scandal. Poor results in the first quarter. So we got poor results, and they're wanting to make the results look better than they really are. So you can read the rest of this, and then you've got several questions to answer. And I would encourage you in writing this paper, this case, since there's several questions, I would probably structure your case response to address each of these questions independently. Maybe have a subheading for that. What would you recommend to the caller if you were Dr. Mitchell? If you're the professor, if you're the person giving financial advice, operational advice to this controller, what's the risk of continuing to work with the company? What's the risk of resigning immediately? Is the State Board of Accountancy a source of advice? Maybe, maybe not. What responsibility do you have to report this to the bank? I would probably say none. At this point, your controller, you got a CFO and a CEO, they're the officers. They're the ones that are accountable. You as controller are going to be accountable if you sign something that's fraudulent. So be careful what you sign. But I think that's probably overstepping your bounds, but I'm answering the question for you, right? Maybe you see it differently. There's not a right or wrong answer here. Well, obviously there is, but for a person writing your case response, if you can support your decision on why you think you should or should not do something, that's what you need to do. Yeah, well, what if the caller's assessment? If she's only been there 3.5 months, what if she's wrong? Maybe it just appears to be. Of course, we got the CEO coming and talking to accounts payable when the controller's not there. That's a violation of procedure. You know, that's why I talk about internal control. It's what's the process for making journal entries like that? Can the CEO authorize a journal entry? I would say no, and CFO as well. It should be up to the controller. Maybe the CFO has to sign, but it should have the controller's signature, right? You shouldn't violate at least 2 levels of management with the CEO going all the way down to the clerk level, assuming that's 4 levels. but that's part of authorization and approval. Remember that from internal control activities? That should be delineated in any procedures that you've got, policies. Do you think situations like this, aggressive accounting or financial fraud, are common in practice? More than you think. What pressures or factors will executives use to encourage accounting managers to have to go along? You saw some of that with WorldCom. Go back and hopefully you listen to all those or watched all those videos with David Myers, where he talked about how he was accused of not being a team player, right? Yeah. Or all these people are going to be put out of a job if you don't do it. Well, nobody wants to put anybody out of a job, so a lot of different methods people can use. A lot of good questions here. All right, number 5 is the fraud triangle. Talk about that in the boot camp. Right, incentive, opportunity, and attitude. You can use a lot of different words there, but that's what people do. They justify their actions. Securities and Exchange Commission, there it is. Of course, what did I call that? The ASC 606. I forgot the number myself. ASC 606 is kind of replaced what you see here. The revenue recognition, it's changed, but then at the same time, it hasn't changed that much. And then number 7, you can ignore. All right, so ignore 7, just answer the first 6. That way, when you turn your papers in, I'll be able to tell if you watch this video. But 7 is just, it's more of an auditing question. This entire case is an auditing case, but you really, as an executive, you need to understand all facets of your business, including, especially accounting. If you want to be successful, you need to understand what goes on in with your numbers. All right, so that's just a brief overview of this case. If I got some other comments I can make, let me see if I can find out, and I'll stop the share here so you can look at me instead of writing on the screen. The COSO study, 61% COSO, COSO. If you click on that website, 61% of the cases associated with fraud involve improper recognition of revenues and receivables, which is what this company did with the accounts payable clerk putting in phony information, right? ASC 606 is important that you understand that. Recognizing revenue is different for different companies. I gave you that example about Exide, recognizing revenue when batteries were shipped. And of course, if it was shipped to Toyota, it was booked as revenue the day it left the doors. If it was Walmart, Sam's, O'Reilly's, Sears, who's gone now, that didn't get recognized as revenue until they took delivery at their warehouse, because when we put on those third-party carriers, those batteries were still ours. So it just depends. The revenue recognition is a big one. So how could you determine this fraudulent information? Well, if you're an auditor, right, mailing of confirmations to customers, but it's really not even to that point. What about contacting your external auditor in this process? Now, they mentioned State Board of Accountancy, the bank. What about your external auditors? So if you've been there a few months, you probably don't really know if they're involved in this. Are they looking the other way, or are they actually wanting to do the right thing? And once you figure out they're wanting to do the right thing, you probably need to tell the external auditors. External auditing wants to know what's going on with your company year round. They're not your adversary. They're giving an opinion on your financials every year and ask some tough questions and maybe have some findings for you, but what you don't want are some material weaknesses or fraud going on. So you want to keep them involved. And this may be an issue that you want to talk to your external auditors about. Company that's small, it probably doesn't have internal auditors. And I think there's a relationship there between HR and one of the leaders, maybe the CFO. I don't remember. I'd have to reread the case. So it's not like you can go to HR, because normally HR is the function you go to when you've got issues with something like this. But it really depends. So company this small, everybody's right there together. Even if there's not somebody related to someone working in HR, a lot of times there's some strange relationships that go on. I could talk for several hours about that between HR and production and management, plant management or corporate management. But I got to tell you, whether you decide to stay or leave, and it's really, that is a good question. Me personally, I would stay as long as I could exert a personal, as long as I could exert a positive influence on the situation, because I've been through some situations where a lot of people probably would have left, but you may be the only thing holding back the dam from bursting. But whether you stay or go, you really need to make copies. I know it sounds kind of like covert operation, but you need to make copies of falsification of records, like the accounts payable clerk. If it was handwritten note, make a copy of that in the journal entry that went in. I can tell you, when you start printing out of any financial system, and every company, no matter what the size, is going to have transaction registers that shows all the journal entries, whether they're automated from accounts payable or payroll, which are usually above board. But when you start seeing manual journal entries, they stick out like a sore thumb. And manual journal entries are okay for the adjusting and closing process. But when you see journal entries in there, you need to make sure there's supporting documentation for that. It shouldn't just be something somebody scribbled out on a piece of paper that has no support whatsoever that supports revenue recognition. So I would make copies of anything like that. Keep a journal of things that people said, dates and times, and what you observed. And you may want to even hire you an attorney. Personally, I never did that, but keep copies of things like that and keep it at home. Could come a day that somebody escorts you out of the office, you don't get to get anything except your car keys and your wallet and your jacket or something. You may get escorted out. Won't be able to get anything that you've made copies of. So you need to keep stuff like that on an ongoing basis at your home. Again, it sounds like a covert operation, but that's the short and long of it. If you find yourself in a situation like this in middle management. Maybe talk to the senior executives one more time and reemphasize your concern about what is revenue recognition, what is appropriate, what kind of checks and balances or internal controls should be there. And maybe resign, maybe get out of there while you can. But obviously, if you leave, you may be the one that gets blamed for it after everything falls apart, because it sounds like it's going to. If it's a startup and they're trying to finagle the financials to make the income look better than it really is, so they can get additional monies to keep the company going. So there's risk both ways. Let's see here. Again, your external auditors at this level, this is interesting because this is an MBA accounting class. It's not just for accounting. People going to be in accounting management, although it's very relevant, probably more so. But this is important stuff for anyone who's going to progress up through the ranks of maybe you're going to be in quality assurance or engineering, that you see flaws in how something's being manufactured to save costs or something. Well, that's every bit as bad, if not worse, but the potential liabilities associated with those kind of things where you don't stand up for what is right. All right, so that's pretty much just some insights, give you something to think about and write about, but please make sure you review all of those links that I have, read those stories. The more you understand things that go on, and they happen because there's just a lack of internal controls. That's why Sarbanes-Oxley came about. early 2000s, after the Enrons, after the WorldComs, the waste managements, Adelphia, Global Crossing, Tyco, Health South, Exide. So these things are in place. And these are things that, again, Sarbanes-Oxley 404, Section 404, which is very relevant for manufacturing plants. We got a lot of those in the area. That was something every 3 months, quarterly, because that was SEC reporting. Myself as controller and the plant manager or general manager, the two of us had to sign off on this long list of checklist items associated with controls. All of them had financial implications, although some of them you might think, well, what's that got to do with accounting? Like verifying the pounds of lead shipped to your facility and how much was received. Everything that has a number on it has an impact on the bottom line. And it was the controller and the plant manager, those two that were the key individuals that were attesting to that. So that's why we spend a lot of time in this course going over things that you're going to encounter. It's not a textbook type accounting class. You're going to make journal entries and then generate a financial report. This is more real world stuff that you need to know now for your career and for your learning here in this MBA program. So again, I've rambled on longer than I probably should have and given you some direction, but I wish you well on this case. Again, email me if you have questions, and we'll talk again soon.